Welcome back, everyone. We are entering Module 5, where we are finally going to cover all of our high-probability entry models. But before we look at how to actually execute a trade, let us first understand a crucial concept. What exactly is a POI, or a point of interest? Up until now, you have learned how to map structure and identify key institutional zones like order blocks, fair value gaps, breakers, mitigation blocks, and liquidity pools like equal highs and equal lows. A POI is not all of these concepts combined together. Rather, any single one of these setups on your chart can be your point of interest. It is simply the specific, high-probability area on your higher time frame chart where you expect institutional activity to happen, and we look for price to test any of them. Instead of chasing the market or guessing where to trade, we map out these individual POIs and wait patiently for price to come to us. Our ultimate goal with these entry models is to trade the next major impulse move, whether that next impulse is going up or down. To find where that next big move will start, we look at the relation between the impulse and the correction. As you can see on the first chart, when a major higher time frame impulse wave is moving up, that is our main train. The corrective wave is just a temporary pullback moving downward against that trend. We look for our POI right at the bottom of that correction, waiting for price to tap the zone so we can catch the next massive bullish impulse wave upward. Conversely, look at the second chart. When the major higher time frame impulse is down, the corrective wave pulls upward. We map our POI at the top of that correction, waiting to catch the next heavy bearish impulse wave moving down. Now, when we transition into the actual entry models, our immediate focus on the lower time frames will be on reading the exact execution triggers, but the underlying expectation is always tied to this larger picture. If we're looking for a sell entry model, it is expected that the major higher time frame impulse bias is down, just like you see on the bearish chart. If we are looking for a buy entry model, the major impulse bias is expected to be up, as shown on the bullish chart. However, we are also going to cover counter-trend trading. There will be times when the major higher time frame impulse is firmly up, but we still want to capture the corrective phase moving down before it hits the ultimate POI. I'm going to show you exactly how to safely spot and capture those counter-trend moves without getting trapped by the main train. Now that you understand how a POI acts as the launch pad for the next impulse, let us dive right into the specific entry models.